In today's interest rate markets, let's take a look at the shorter end of the curve today in the two-year note futures as they're experiencing some selling pressure. Two-year note futures coming off of 2 days of higher price action to trade lower today. Intraday lows correspond with the lowest level in over 2.5 months. Currently priced right around 101.30, which is near the closing low for the week, which also is a 2.5 month low, closing low, I should say. So we're back down towards the low end of the range here over the last couple of months. And when you look at some of the driving factors, really U.S. Inflation data, the theme this week, and we got more of that this morning in the form of the U.S. PPI data, much higher than anticipated, both on the headline and the core number. And that has caused some concerns now in the Treasury markets as to how the Fed might handle this moving forward. And it certainly has pushed the expectations as far as rate cuts further out on the curve when you look at the price action in the futures markets. And with today's data, again, the Fed speak that has continued throughout the week is cautionary as far as they're going to continue to evaluate the data before they decide to make a decision on rates. And so that's creating some selling pressure. Now, looking at the yields, two-year note yield is up. What do we got? 9 basis points today to 466 basis points. So pushing back up towards the top end of the range here for the last basically 2.5 to 3 months. And the yield curve shifting higher across the entire curve today, from the short-dated bills all the way out to the long-dated bonds, where we're seeing selling pressure and creating, pushing, I should say, those yields higher. With that dynamic in the market. So selling pressure, two-year note futures moving back down towards the recent lows, which also correspond with 2.5 month lows.